Okay, hello and welcome everyone. While everybody's joining, we're so glad that you can join us today for our 1-hour webinar, Building a Strong Internal Controls Framework for AP, Best Practices for Mitigating Fraud Risks, Ensuring Data Security, and Maintaining Accurate Financial Records. I'm Haley, and I'm part of a marketing team here at MHC, and I'll be facilitating today's discussion. Our speaker today is who I will introduce shortly. But first, I'd like to quickly go over some housekeeping items. This webinar is being recorded, and attendees will receive a follow-up email with the link to the recording on our website. All participants have been muted to prevent background noise, so please type in any questions you may have into the Q&A section at any point, and we'll get to questions at the end. There will be a post-webinar survey that will appear when the webinar ends. Please use the survey to let us know how we're doing and to request any additional information, and an MHC resource will follow up with you. We really appreciate your feedback on these webinars. And one more item before I introduce our speaker today, we'll talk a little bit about MHC. So for those of you who are not familiar with MHC, here's a little bit about us. We help organizations tackle digital transformation with speed and confidence, using our solutions to automate the capture, transformation, and communication of paper and digital documents across core business processes. Our flexible end-to-end automation platform helps users eliminate tedious procure-to-pay and order-to-cash tasks, increase efficiency, achieve operational excellence goals, and strengthen relationships with customers and vendors. All right, now let's get to know our speaker. So our incredible speaker for today is Debra Richardson. Debra has a lot of experience in accounts payable. She's a consultant, trainer, and speaker with over 20 years of experience in AP, AR, general ledger, and financial reporting for Fortune 500 companies, including Verizon, General Motors, and Aramark. For 10 years, Debra has focused on global vendor setup and maintenance. As AP Senior Manager, she led a team that processed over 2,000 vendor add change requests per month, and she was responsible for 140K plus active global vendors across 7 ERPs. She's a certified fraud examiner, so she provides accounts payable teams consulting services and trainings to help with their authentication techniques, internal controls, and best practices to prevent fraud. She also has a YouTube channel where she posts vendor master file tips every Tuesday and hosts a weekly podcast, putting the AP in happy. We're very excited to have Debra today. So with that, let's hear about today's topic from Debra Richardson.
All right, well, thank you very much. All right, so let's take a look at the agenda. So we have 3 areas that we're going to cover. First, we're going to talk about the challenges and risks of AP. I'll also talk about, why and how. I know I'm preaching to the choir why AP is very critical to an organization. And then we'll talk about an internal control framework for AP to mitigate those some of those challenges and risks. And then we'll talk about following that up with monitoring and evaluating. But before we get to that, we do have our first poll. Just to get an idea, right, of how many invoices you process per month. So go ahead and answer whether you process up to 1,000, up to 5,000, up to 10,000, or 10,000 plus. So go ahead and respond to the poll. And quite honestly, whether you no matter which one you pick, right, you still have those same challenges and risks, really all levels or all tiers of volumes of invoices really still face the same challenges and risks, and they are still, right, those invoices are still important to financial reporting and just critical to organizations. So go ahead and vote. And then, Haley, if we could see the responses maybe after a few. Okay, there we go. All right, so it looks like the response to the poll shows that 36% looks like it's the highest, have 10,000 and plus. Up to the next highest is up to 1,000. That's 32%. 27% is 5,000, up to 5,000. And then those that are between like the 5,000 and 10,000, that's the lowest, about 5%. So thank you for participating in that poll. Again, all size or all volume of invoices, right, have the same challenges and risks, and they are also very critical to the organization. And so let's talk about the challenges and risks of AP. But again, they're all critical because accounts payable is, right, a financial process that involves the payment of invoices and other liabilities owed by an organization to its vendors and suppliers. It's a critical function that impacts cash flow and financial reporting. And so here you can see that financial reporting is right in the middle because all of these functions do contribute to accurate financial reporting. And so vendor setup and maintenance, right, that is crucial because one, it maintains strong vendor relationships, right, and two, right, it's timely and successful payments can improve vendor trust and lead to better pricing and services. Now, invoice processing, right? Those invoices that you process each month, whether it's 10,000 plus or up to 5,000, those invoices are an essential function in maintaining the financial health, financial reporting, and operational efficiency of a business. And payment processing, right? AP plays a critical role in managing cash flows by ensuring that the vendor payments are made on time and that there is sufficient cash reserve for other business operations. And then finally, data systems and security. This is critical because that's how you process your financial transactions, right? That's the system you process them in. That's where your vendor sensitive data information is stored, like their tax ID, their remittance information, as well as all of those financial transactions. That's where they're stored. So restricting access ensures that you are compliant with regulations, you're avoiding both internal and external fraud. So all of these functions are critical to your organization, especially to financial statement reporting. And so let's talk about financial statement reporting. So the income statement, right, reflects your revenue and expenses for the period, and any invoicing or payment errors like miscoding and fake invoices contributes to the inaccuracy of expense reporting, and late or missing invoices, right, really means that you're not following the matching principle because the expenses that's tied to the revenue from that period are just not included. And then the statement of cash flows reflects your cash outflows and inflows for the period, and invoice and payment errors like fraudulent payments due to internal or external fraud, duplicate payments like those from reimbursing expenses on an expense report and then turning around and also paying the invoice, right? That affects it, as well as payment errors. That leads to increased outflows and reduces your company's access to cash for other things like tools or, right, that software that you might need to make your job easier. And then finally, late payments can lead to additional fees, penalties, and just damage to your vendor relationships. And then the balance sheet reflects your financial position at any time. So if accounts are overstated or understated, it really shows an inaccurate financial position, not just to your leadership or board, but then also maybe to other investors that might rely on those reports to compare your company to other similar companies, right, in the industry, or maybe even to lending institutions that use these numbers to determine the cost of borrowing for your company. So overstated, understated accounts, right, lead to inaccurate financial positions. Okay. So in addition to errors, right, fraud is rampant. So you can have fraudulent invoices where maybe you have a fraudulent remit to info for an existing vendor account, or maybe even a synthetic vendor account, which that fraud has trended up where there's really no vendor behind it. It's just a fraudster creating, right, a synthetic vendor. And they used to just kind of regulate that to consumers, but now they are moving into creating those synthetic vendors. Also, how about inflated or fake invoices for goods or services that were either not provided or not provided at the agreed upon price or quantity. Also, you have expense reimbursement fraud too. You can have false or inflated expense reports for reimbursement. There can also be, as I talked about before, duplicate payments resulting from paying expense reports and then turning around and paying it via an invoice. Check fraud has been on the increase, right? So the creation of fraudulent checks, the alteration of legitimate checks, or the unauthorized use or theft of legitimate checks. And then lastly, business email compromise. And we all know about this, right? Change my bank account information, or now the fraudsters are also looking to change remittance address information so they can divert your check payments, vendors' check payments as well. And this fraud in AP can be perpetrated by both internal and external fraudsters, right? And external fraudsters are evolving. They're now using large language models to avoid those grammatical errors that we're always told to look for to identify, right, when an email might be fraudulent. But they're also using deepfake images like like images, video, and audio to perpetrate fraud, which leads us to our next whole question. And that question is, has your company offered training on how to detect deepfakes? Is that yes? Is that no? Or is that unsure? Now, we may think it's fairly new, but I know you guys have heard of the deepfake audio where a controller thought he was talking to his financial director, and it turned out, and he knew the financial director knew the voice, and turned out that it was a fraudster using a cloned voice, and that resulted in a series of transfers that amounted to a $35 million loss. And I know we just recently heard about it, but that actually happened in 2020. So can you imagine how much that technology has improved? The good news is that if you haven't received or heard about it yet, Bloomberg reported this month that there was a similar fraud with Ferrari. However, the finance person asked an identifying question to the fraudster that had called, right, with that clone voice. And because the fraudster couldn't answer, they hung up. So that's really great. But let's see what the results are for how many of your company or how many of you have had fraud training for deep fakes. And so it looks like 56% says no. So that's the highest. And then the next highest is 24% said they have received some fraud training. And then 20% are unsure. So we definitely need to get that fraud training for deepfake audio, deepfake images, deepfake videos, and then also those emails that are going to come through that are going to look legitimate, because they are not, right, going to have the grammatical errors or the context errors, just because AI is available to those fraudsters as well, and they are definitely using that. All right, so now let's talk about data and systems management, because we don't want to make it easy for internal and external fraudsters, right, to perpetrate fraud, because we're not securing or restricting, right, our data in our system, especially our vendor sensitive data. So you don't want to have unauthorized access to sensitive data. So you really do need to limit who has access to see your vendor's tax ID, because it could be their social security number. You need to limit who has access to see or edit your vendor's banking and also your vendor's birth date if you collect it, and any other sensitive data that you may collect from your vendor. You also want to prevent unauthorized access to perform transactions. So you want to limit who has the ability to post invoices, to create and edit vendors, and to generate payments. You also have the issues with, right, non-compliance with regulatory agencies. So team members may be unaware of new rules and regulations about how to store that information in your accounting system or ERP. And then, right, you just have a lack of consistent review process. So as team members leave the department or leave the group, right, there's no process to confirm access has been removed. And then you really do need that consistent process to review, to verify historical access requirements, right, are still needed. And I will tell you, as a practitioner, it took me 2 years in my last role to even recognize that our purchasing group, our vendor requests were all processed within our vendor team, but I didn't know that our purchasing team had the ability to edit the contact information on our vendor record, right? And the contact information is kind of critical, because that's how we contact the vendor if there are any changes, right? And so you do need those types of security audits, and just take a look at it to see if your processes have changed, if you need to remove access from different departments or different roles that previously needed it. I will tell you this, we absolutely did remove that access to our vendor record from any roles that we saw it on, such as the purchasing role, so that we could secure that information in our vendor master file. All right, so with all of that, now let's get to the internal control framework for AP. And I just want to talk about list here some compliance requirements that we all have, right? We all know about Sarbanes-Oxley, or SOX, right? That's the federal law that regulates public companies and their accounting practices. It requires companies to establish and maintain adequate internal control over financial reporting, and provides for criminal penalties for non-compliance. So that's one. And then we all know about the Internal Revenue Service, right? We need to collect that valid tax ID, that valid legal name tax ID combination, so we can have accurate tax reporting to avoid fines and penalties, and really some additional manual work if we file inaccurate tax ID legal name combination with our tax reporting for our reportable vendors. So now we got to go and collect that information again, and then there's extra criteria. So we all know about the IRS, right? We want to avoid those fines and penalties, that extra work. Also, what about OFAC and other watch lists? We want to make sure that we are in compliance so that we avoid paying vendors that appear on exclusion lists. So we don't have penalties. And actually with OFAC, they can hit you with both civil and criminal penalties. And so you want to make sure that you're not paying vendors that appear on those lists that are applicable to your company, to your industry, to your vendor countries. And then how about NACHA, right? So NACHA is the governing body over the ACH network. And they have rules and rules that operating rules that you need to follow for paying ACHs. And not sure if you're aware of this, but in the past couple of years, they have passed a couple of rules that do affect AP and the vendor data and process. They passed the supplementing data security requirements. They actually had two levels of that, and the first one I believe was in 2022, but it required all companies that had 6 million or more ACH transactions to make sure that they encrypted their vendors' banking when it appeared on invoices, when it's stored in your vendor master file, to make sure that it was encrypted or unreadable at rest. And so that threshold went down to 2 million. I believe it was the very next year. But that is in place now, where if you have 2 million or more ACH transactions, you have to make sure that your vendor's banking on invoices or in your accounting system is encrypted at rest. They also came out with the micro entry rules. There are actually two phases to that, and both are in place now. But the first phase was that you had to include account verify abbreviation, right, of when you were sending those penny tests in the pay file, so that the bank could tell what it was. And then the second iteration or second phase of that is you have to have a way to detect if there was increase in fraud. So you had to have a way to look at all your transactions and then measure if you had an indicator of fraud. Let's say, you send 100 transactions up and there's no fraud or a small percentage of fraud, but then you send another set of 100 transactions up and all of a sudden there's a 50% potential for fraud, or 50% of accounts found that could be fraudulent. You have to have a way to detect that. So I did put links when you get the PDF for this. All of the links that are included here, you'll be able to click through to them, just in case you want to learn more about them and just make sure you are compliant. So those are some of the compliance organizations and types of compliance requirements that we have for accounts payable and our vendors. And so with that, let's take a look at the internal control framework. So we're going to look at vendor data management, invoice processing, payment processing, and data system management, internal controls and best practices. And the biggest one, though, is segregation of duties, really permeates through each. And so we're going to look at segregation of duties. And let me just unload all of these. I always get the animations kind of backwards. So segregation of duties, right? That means separating the functions of processing invoicing, approving payments, generating payments, and really maintaining records, your vendor records, across or among different employees or departments to prevent fraud and errors. And here's an action item that I always recommend is perform a segregation of duties audit. The next thing is to require trained backups, right? So if make sure that you have someone that can perform other employees' duties, because when you have that, now you can require your time off. So require at least 5 consecutive days off per year for each employee, and then have that backup cover that employee. Now, had that been done, not sure if you guys have heard of the Queen of Horses. It was a documentary. It was about an hour and 10 minutes long, or 110 minutes long. That's 70 minutes long. But that documentary originally was on Netflix. Now I think it's on YouTube for free. It was also recently on Amazon, but it was all about a finance director for a city or a county, but it was the city or county in Illinois that former President Ronald Reagan grew up in, and she perpetrated fraud for over 20 years. And The way that it was found was that she went on vacation, except this time there was a new person that requested the bank statements, right? Because the finance director was on vacation, and there was also a new person at the bank that didn't know, right, not to give the new person at the county or the city, right, the extra bank statement for the extra account that nobody knew about. So make sure you require time off and have that backup cover all tasks that that person does. And then the last one here is to require position rotation every 2 to 3 years. Now, I know we kind of hate to do that in accounts payable, but you really do need to rotate employees in key positions. And if you assign specific vendors or invoices, based on either region or maybe the alphabet, just switch those up. Same thing with assigning categories in or vendors managed. That happens a lot in purchasing as well. So now let's talk about some controls, best practices based on are the critical functions. And let's take a look at vendor management first. And so some controls that you can put into place is to require approval for all new vendor adds and vendor changes. Also review backup and validation and the validations that were performed to make sure that your documented process was followed. And this can be a great compensating control if you have a segregation of duties issue. The next one, which is something that we definitely did when I was a practitioner, is we did not create hotels or restaurants as vendors so that we could prevent the potential payment of those expenses that were typically paid with a corporate card. Right. And so what would happen sometimes, and I know you've seen this too, is that an employee will submit the expense of, let's say, a restaurant meal or a hotel stay on their corporate card and then submit that on their expense report. However, that hotel or that restaurant may still even send an invoice. And so if you refrain from setting up hotels or restaurants now, even if that invoice does come through, it's not going to be paid because you haven't set it up as a vendor. The next thing I do recommend when you're setting up vendors is to require confirmation. When you're setting up or changing vendors, is to require confirmation before and after the change. So that confirmation call, right? You can actually do that confirmation call for new vendor adds as well, just to confirm that there is a real vendor tied to it. But definitely do it for any changes, but do the confirmation call, and you're probably already doing that to validate the request for the remittance change. But then after you have that successful confirmation, you still want to send a notification of the change to the vendor just in case, right, that information that you used for the confirmation call came from a fraudulent place. I know you and I know not to use the information from the original request for the change in that email to do the confirmation. But the reality is that if you're not performing that confirmation call yourself, you don't really know where they're getting that the information from to make that confirmation call. And I will tell you that I have talked to lots of practitioners at in-person conferences that say it's getting harder to find that information for the confirmation call because you don't have it in your accounting system or ERP, you don't really have a relationship with the vendor. And when you go to look at, their online presence, one, fraudsters can set up websites very easily now with artificial intelligence, right? But two, even if you are looking at the vendor's legitimate site, they have taken down the contact information for those in AR or whomever you may need to confirm the information with. And so it's getting harder and harder to find, right, that contact information. And so some are turning to the original email request. And so what you want to do is surround that confirmation call with other controls, one of which is sending a notification of the change to the vendor. And so just like when you and I make a change to our Netflix, Hulu, Amazon, I mean, you guys can see what I do, to those accounts, maybe even to your online bank account, you get an email to say, hey, a change has been made to your account. If you did not make the change, then either change your password or to contact us. You might see, I know we can make jokes about vendors not reading their emails, but maybe if your vendor does read that email and they did not initiate the change, they can let you know before you even pull that payment with the fraudulent banking details or the fraudulent remittance address. Before you even pull that into the pay file, your vendor may let you know that they did not initiate that change. So it's worth doing. I'll also tell you that it seems like a lot of work, and yes, it is an extra step, just like the confirmation call. But I was successful in automating that in our accounting system or ERP in order, just based on what data or what fields were changed. It would automatically trigger that to the vendor via email if we had an email address on file. And then the last one for vendor management that I have, definitely not the only one, but is very critical. This one is very critical, and is to inactivate vendors on a regular basis, because after some point, 15, 18, 24 months, that information is really considered stale. And if you send that payment out to an address that's owed, to banking information that's owed, then that payment is going to come back. Your vendor's not going to be paid on time, and it's going to interrupt your cash flow, and also maybe even affect your terms for that vendor go forward as far as pricing. So you want to make sure that you're inactivating vendors whose information is considered stale, because if they do business with you again, now you have to collect all the updated information. And when you do send that payment out, it will be valid. Also, the less active vendors you have, guess what? That means is the less vendors that are available for both internal and external fraud. So that's vendor management. Now let's take a look at invoice processing. And so some internal controls you can put in place here is to make sure you're paying for from original invoices only. Don't pay based on statements, and also establish a process for unnumbered invoices. That really helps to reduce the number of duplicate invoices paid, which, as we learned before, can help to make sure that you are recording the accurate expenses, and then also not increasing your cash flow because you're double paying invoices. Also, make sure you're reviewing your non-PO invoice, right? Verify the invoice backup to make sure it's not fraudulent. Review, right, your invoice number sequences, and investigate those things that have like the extra digits on it or characters on it, like 1 or A, that could indicate a duplicate invoice. Also, invoice accuracy is important. So review to verify the receipt of product or service at the agreed to quantity and price. And then lastly, here, one of the other key controls is to make sure your approvals are driven, right, by your delegation of authority. Match the process with your PO or approval based on authorization limits. And this is an action item I think it would be great for anyone, is just to review your delegation of authority and update it if needed. Have a regular review and make sure that it's updated when necessary. Now, the next critical function is payment processing. And so here's some of the things that you can do, for some internal controls that you can add to prevent fraud, and then also additional manual processes. So the first thing is the ACH transaction review. So review ACH transactions to approve or return on a case-by-case basis. This is when you're reviewing them with your bank. But really, too, you can review them before they go out the door. So let's say you run your pay file for ACHs and it hasn't gone out the door, but you have, run your pay cycle and you know what vendors are going to be paid. Why don't you run a report for all vendors over that have a payment over certain thresholds that have had remittance changes in the last 30, 60, 90 days, and just have a second set of eyes go over those payments before they go out the door, just to make sure that there are no red flags, that the person that processed the remittance change may have missed, right? Doesn't hurt to have a second set of eyes, make sure the process was followed, because this is the last chance that you're going to get to verify that any changes to your vendor information for ACH payments was not fraudulent. So great time to do that. And then how about implementing fraud monitoring for micro entries, right? We talked about that requirement for NACHA, NACHA. So implement a system to identify fraud patterns when sending micro entries to confirm vendor banking. And then micro entries, again, are those small amounts that are less than $1 sent to a bank to verify account ownership. The next thing you can do is to implement payee positive pay. And I've seen this quite often with some clients and subscribers that talk about, yes, we have positive pay, but do you have payee positive pay? Some banks will call them different things. So positive pay is, you can think about that as, right, verifying, sending that file to the bank, right, with your checks to say check number, 1001 is for, this amount of money, $20, right? And so that can really be a fraudster's dream, because all they have to do is change the payee name, because you haven't sent that. And so the bank's not checking that when the checks are presented. But if you change it to payee positive pay, it's going to not only check that the check number and amount matches, but it's also going to check that the payee name matches. So when the fraudsters are, buying the arrow keys because some, burglar or a thief, robbed a postman, and that does happen, to get the arrow keys that can open those blue mailboxes and apartment mailboxes in a certain region, right? They will purchase those, and then they will get the checks out of there, and they will change the payee name. But if you change it to payee plus check number plus amount, you'll reduce the potential for that happening. And so an action item is to really verify whether you have positive pay or payee positive pay. And again, your bank may call it something different. So just make sure they're checking for the payee name as well. And then lastly, you've heard this before, reconcile your bank statements, investigate to reconcile any discrepancies. Best practice is to reconcile it daily. And then also separate your check stock custody and check issuing from the bank statement reconciliation as well. Now, the last critical function here is the data or security systems, data system security. And so here's some data systems management internal controls. So one is very important, is least privilege access. You definitely want to restrict user access to systems to only what is required to perform their assigned task. And a great way to think about this is, if you have training to avoid fraud and social engineering, right, you don't want to have a fraudster go to, and I always call her Helpful Sally, right, who has not had that training. She's in a different department, but she's very helpful, and she's easily the social engineer. And if she has access to that information, now the fraudster has access to it too. So an action item here is perform that security audit to see what roles are out there, see who has access or what access is available on those roles, like access to the vendor contact information screen for purchasing. That, again, took me 2 years to find that out. So see what those roles, see who has, what the roles are, what the roles have access to, who is assigned to those roles, and make sure you're performing that security audit to get those roles updated where necessary, and then to make sure that the right people have those roles. And and one thing to keep in mind too is the next internal control is mass sensitive data. So let's say you have a team member that that processes invoices, right? Well, we know we need to know certain information to make sure that it posts to the right vendor, right? So maybe we need to make sure that we have the right vendor based on the tax ID. But that doesn't mean that they need to see the whole tax ID. They can see the last 5 digits or whatever mass format your company has. And so masking that vendor sensitive data means now you can't have another employee that might be social engineered. So only give those folks access, for example, to the vendor data that actually processes vendor requests. Everyone else, give them access to view mass sensitive data. And so mask things like the tax ID, the date of birth, maybe even the remittance address, but definitely the bank account number and the routing number, if you have to even show the routing number, right? I actually recommend you don't, but if you do need to show that, then mask that as well. Also, in your system, and you don't have to do this, you can let your IT team or systems team do it, have a cross-check background monitoring that the vendor address or vendor banking never matches the employee's address for banking. And if it does, then have management be notified. And again, you don't need to get access to that. Work with your IT team or systems team in order to set that up. And then this last one is to make vendor banking unreadable at rest. This was that other NACHA operating rule, right? So vendor banking should be unreadable at rest when included on vendor invoices stored. And then it also should be unreadable at rest when stored in your accounting system or ERP. Now, if this is the first time you ever heard of that, that rule from NACHA. I actually did have, because I have a podcast too, and I had a NACHA director who was over the operating rules come on and talk about these as they were going into place. And one thing that she said is that you shouldn't panic. If you're just hearing about this, don't panic. Go to your IT team, your systems team. They have probably already done this. And if you are required to do it because you are 2 million transactions or over per year, your bank probably already notified you. But one thing to keep in mind that she did say is that at some point, it's going to be like PCI requirements for credit cards. It's going to be required no matter the threshold. So make sure that you work with your IT team to make sure that that's already in place. All right, so now we're at our last poll, poll number 3. And so this poll is, do you review your company's financial statements? Go ahead and put yes, no, unsure. And this really comes in because there are things that you can do and you can track to make sure that your company's financial statements are accurate. We talked earlier about the different things that errors and how, or we talked earlier about how errors can affect the financial statements. And so reviewing them and kind of tracking those things that you actually have control over can help to improve the accuracy of your company's financial statements. So go ahead and answer yes, no, or unsure. Okay. All right, so let's see the results of that. All right. So, oh wow, 65% say yes, that is absolutely great. And then 35% say no, wow, we didn't have any unsure. So it's great. You either know you do or you know you don't. But it's really great that 65% of you do check your company's financial statements. And so let's talk about why that can be important as we talk about monitoring and evaluating. So here's some activities that you can do to monitor, right, your internal controls and other best practices, right, to make sure that that they are working. So continuous monitoring, right, that ongoing monitoring and testing are crucial for ensuring that internal controls frameworks are effective, they're up to date, and it is important to monitor them regularly, to test the controls periodically, and to report control deficiencies promptly. And so one action item is to, if you can, is to look at implementing continuous monitoring for vendor validation, such as watch lists, because really you are not supposed to be paying vendors that are on the watch list that pertain to your company, your country, right? Maybe even your vendor's country, your industry, like OFAC. And so if you think about how many pay cycles you have, that's opportunities there to pay vendors that have subsequently been added to a watch list since you last, since you originally onboarded them or checked them last. Another thing is audits. Now, audits are a standard tool for monitoring AP performance and controls, right? They've got that independent, objective assessment of how effective they are and help identify rules or areas for improvement. And where I'm going is an action item that you may not have thought about is implement a vendor process audit. That really helps to ensure that team members are following the established processes. So if you're putting in these internal controls, if you're putting in authentication techniques, if you're putting in vendor validations, right, and best practices in order to avoid fraud and fines, you have to make sure that your team members are following, not just, you know, right after a fraud happens, right? You have to make sure that they're consistently following it, even during the busy month end, even during the busy year end. And so adding in that vendor process audit can help to make sure that the team members are consistently following that process. And then how about other considerations like policies and procedures, right, that provide the guidelines for processing invoices, approving payments, maintaining accurate records, ensuring compliance. And so one action item I have is create, if you don't already have them, or update your desktop procedures, right? And if you have desktop procedures, you know as well as I am, as well as I do, that they are living documents, right? They're never ever quite done, but you do need to have desktop procedures, especially if you want to implement that vendor process audit, because with the desktop procedures or updated desktop procedures, now you have an auditable process. And then how about technology, right? So automation reduces the risk of human error, it improves accuracy and increases efficiency in accounts payable. And an action item here, although I know it depends on your budget and getting it approved, but how about implementing that fraud detection? So yes, we can talk about ways that you can detect deepfake AI images and videos, right? And also audio, right? The voice cloning, but it's very hard to. As the technology improves, it gets harder and harder to do that. And so implement a platform or a program where it can look at your, you know, transactions and identify, right, some fraud detection. There are, by the way, some fraud detectors out there for like images and videos. they're not that great, right? So we're kind of really left to ourselves when we get that email, when we get that phone call, when we jump on that conference call to identify, to detect whether or not that is a fraudulent medium. And did you know that one way that you can use if you're on a conference call or a web call, like that one incident that we know about, right, where $25.6 million were lost because a finance worker jumped on a call, right, with what he thought were multiple internal team members, but it was really video deepfakes, right? One thing that could have been done that might have helped, and this actually came from the FBI. So have them do a gesture, and not just any gesture. Ask them to do a gesture that might be a little hard and might show you, right, that it is a deep fake video. And so again, this came from the FBI, and their suggestion was to have them turn their head and cough while holding their hand up, right? That's not something that you normally do. And if you have the head turned with the other, right, with your hand up, that might show you that it is a fraudulent or a deep fake video. Not to say that, right, the technology is not always improving, but that's one thing that you can do outside of, right, implementing that fraud detection, because it's going to get harder and harder to detect those, especially those deep fake frauds. And also the emails too, because now you can't rely on, right, grammar errors and context errors because they have fraud, malicious LLMs. It's not Chat GPT, it's Worm GPT, it's Fraud GPT, and they will definitely give them a perfectly worded and a grammar error-free email to send to you so that it looks more legitimate. All right, some other considerations are, how about regular training and communication, right? That's very strong for internal controls. And one of the things is, one of the action items that I recommend is that you keep up to date with fraud trends by finding scam alert resources. That's the only way you're going to know what they're doing now. And so I have a new scam alerts page where I probably post about 2 to 3 per week. And so if you sign up to get the new scam alerts when I post them, the very next day after I post them, you get a cumulative list of all the new scams that I've seen from various resources. But you don't have to, sign up for me. You can also go to the FBI Internet Crime Complaint Center alerts. They post what they call it, industry and consumer alerts, so you can check that out. I didn't know that the U.S. Postal Inspection Service has news alerts and wanted posters. So, I talked about the thieves stealing from the postal carriers. So they will post those there because, and those pictures are a little gruesome, but they want to be able to find, right? They want you to see the face because they want to be able to find those thieves, right? So they put the wanted posters out there, but they also investigate fraud, and so they'll have some fraud news there as well. And then the IRS has a subscription service with actually a lot of different subscriptions, but if you at least subscribe to the tax scams and consumer alerts, they'll send you an email, right, when they have had reported to them different scams. And then the Better Business Bureau has a scam tracker. I really like them. They also have a new page for new where they post new scams. But the scam tracker is really good because they allow the victims to post. And so they're really good for finding the most updated scams or most recent scams, like in your region, your state. And so these are just some resources that you can use so you make sure that you stay up to date with frauds. And then finally here, let's talk about financial statement reporting and ways, if for those 65% that are looking at it, right, and those 35% that might, you may want to start looking at your financial statements, right? You can use some KPIs, which are things that you have direct access to change and to be more positive, right? So that you can affect your financial statements in a positive way. So a couple of things, some of the key performance indicators that you can look at. How about duplicate payment percentage, right? On the income, that means your expenses are overstated, decreasing net income. And again, the matching principle is not being followed, right? It also increases your cash outflows. So take a look at your duplicate payment percentage. So you'll divide your duplicate invoices paid or you'll divide your total number of invoices paid by your duplicate invoices that were paid. And then how about payment error percentage? So this tells you if you're damaging your vendor relationships and affecting your credit terms, which can affect your company's cash flow. So this is where you want to divide the total number of invoices paid by the number of invoices with payment errors. And then another one too, I'll skip down to the bottom. How about the top payment method percentage, right? So what's the percentage of check payments, which take longer to move cash? Some companies like their float, but it's not what it used to be. It's not 7 days anymore. It could be same day or 3 days. And then how about what percentage are your ACH payments? They are the highest focus of fraudsters for fraud. And so, right, you've got more fraud for ACH payments, which means you need to put more controls in place. So those are some things that you can do to track what you do to try to improve what you do so that you can have a positive effect on your financial statements. And so the benefits, just to summarize here, of effective internal control system is you have improved financial reporting accuracy. So we just talked about that. You also have decreased fraud risk, and you have an enhanced or data systems security because you have put those processes in place that is going to positively affect either by reducing fraud or and the potential for fraudulent transactions or decreasing fraud in your company. So that is all I have for today. And now we do have just a few minutes for questions, Haley, if there are any.
Yes, thank you for a great presentation, Deborah. And yes, we're going to get into our Q&A section. So if you have any questions, anybody, feel free to drop them into the Q&A section now. I see we did have a couple that came in during the presentation. So I'll read off this first one here. Deborah, it says, what is the best way to handle the confirmation calls? This is about the vendor management slide, by the way. How do we verify the information? Google the company, how do you make the calls? Because if I got a cold call asking to confirm banking information, I would think this was fraud.
Yes, and I will tell you too, so I talked about how a lot of companies on their websites, when you go to get their contact information, they have pulled like the AR team's information off because they're trying to avoid fraud. In addition to that, they are telling these team members that when they get a call to confirm banking, just to not confirm the banking, because how do they, if you think about it, they don't know who you are either. And so what I recommend is you have a script for that confirmation call. You have a script, you introduce yourself, you introduce your company, you introduce and you say that a change has been requested by either the person that they are familiar with at their company or a person that they are doing business with at your company. That puts them a little more at ease with confirming, right, the let's say the banking change. And then once you do that, you want to include some authenticating information, right, just in case. And if you have this script and you're not doing it yourself and some other person is doing it, a direct report, now you want to put in there that authentication of who you are talking to. So just ask them, What is the last 5 digits of the existing banking information? What is the last 5 digits, right, of the account, of the routing number? And now you know if that direct report is contacting the fraudster because they couldn't find their information anywhere else, and so they're using the information from the invoice or from the email request, that the fraudster will probably just hang up, just like that finance worker with Ferrari when they ask an identifying question. But if they do pass that, then now you know that they are your actual vendor, and they know, right, that you are their actual buyer, and you can have a better time and a better result from that confirmation of the banking. So after they authenticate, then you have them confirm the change by, again, asking the last 5 digits, but not now of the, but now just of the new vendor banking account number and routing number. So that is the best way, is to make sure you have a script for that, because I do understand, I've been there. It is hard to make those confirmation calls, and that's assuming you get somebody. So sorry, that was probably long-winded, but I'm very passionate about that part.
That's great. Thank you for answering that, Deborah.
Mhm.
And yes, it looks like we are at time, but we were able to get to that question, so that's great. Again, thank you, Deborah, and thank you all for attending. If you're interested in learning more about what's going on at MHC, you can register for our monthly newsletter. You'll receive a reminder about upcoming webinars and interesting thought leadership content like our session today if you choose to join our newsletter. So a link to that will be included with our follow-up email. So be sure to register for that if you'd like to hear more like this. And thank you for joining. Thank you, Deborah, and have a great day, everybody.
All right, thanks for having me. Thanks, everyone.